Hello everyone, welcome back to Upside Down Data. Today I want to talk a little bit about some possible downside and upside targets for Bitcoin. If you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter, put a lot of updates, better indicators and more over there. So the first thing I want to talk about is the bearish scenarios. What are price levels we can look for? Should we have to keep going down? Should the macro conditions stay really bearish, keep dragging risk assets down lower and lower and lower? And so the first one that I want to talk about is the 300-week moving average. So this is a moving average that a lot of people look at as being kind of the next level to watch now that we've lost the 200-week, now they've fallen below the 200-week. Because the 300-week has acted as kind of the last line of defense, back in the March 2020 crash, kind of that massive capitulation. Now, it's kind of an untested moving average because that was actually the only time we ever got close to it. So it'll be interesting to see how price interacts with it now, if people really ascribe much meaning to it or if it doesn't really matter. But it's one to keep an eye on. It's currently sitting at 16.7K. Could be interesting to see if it kind of acts as support should we have to go down lower, if we lose our current price levels. But the other price level I want to talk about, which, is kind of the next leg down that I see as one that might act as strong support should we get to it, it's kind of around the 12K range. So I'm showing you here the volume profile over this visible range. And we see that a lot of volume transpired at around 12K, and it really dwarfs the amount of volume that transpired above it. You can see this is a massive amount of volume that transpired between around 9 to 12K. And so that means a lot of people might have their cost basis down there. A lot of people might see that as a value zone, could act as support from a technical level. And on-chain data backs this up and shows confluence. So this one I'm showing you here is the distribution of realized price over in the entire Bitcoin network, so at different price levels. So basically, where do people have their cost bases? So the higher the bars are means that more people have their cost basis there, or more coins have their cost basis there. What we can see is that this 20K range, one of the things we talked about back when we started losing 30K was that, there wasn't really a whole lot of on-chain support until around 20K. And sure enough, that's where we fall into, and that's where we started to find some support, in the 17 to 20K range right around here. What you can see is that there's some cost basis here, but not a whole ton. And should we lose this, next level to watch would be, sure enough, 12K. That's the next kind of level. So this is why I actually expect this to potentially act as strong support. So should things get more bearish, should there be more capitulation moments, let's say there's more contagion that happens with all these things, these different funds, 3AC being one, but now actually Voyager has just, shut off their withdrawals because of, their exposure to the 3AC. Should that contagion continue, maybe that drags down prices even lower. And one other place we can look for confluence is actually looking at just the overall long-term holder realized price. So them as a cohort, long-term holders as a group, where's their average cost basis? And currently it sits at around 20K or 19.8K. So we technically dipped a little bit below it, certainly dipped below it as we went down to 17, 0.6K or at the bottom of that wick. And so, in every single prior bear market bottom, we have gone below the long-term holder realized price to different degrees. And actually, if you look at the max drawdown from that, which happened back in 2015, is around a 40% drop down. If we had another 40% drop down from these levels, guess what? We'd be back at around 12K again. So there's a lot of things we can look at that might suggest that 12K could be important. Structurally, it acted as resistance back in 2018 and 2019. Maybe we can turn it into support should we come back down here again. And should we lose those levels, it would be concerning. Then people will talk about 6K being a potential next level to look for. And really, if we can't hold 6K, then it's really bad. And I think most likely to get to 6K, we'd probably have to have pretty severe market conditions. Stock market crashing, like 2008 style crashing kind of a thing. But should that happen and everyone's just panic selling risk assets, there's really, who knows? It's anyone's guess at that point how low we go. But short of that really extreme situation, what I'm looking at is first 300-week moving average, 16.7K, and then the 12K to 10K, 9K kind of region. Below that, should we have to fall that deep? But I also do want to talk a little bit about upside targets, right? So if we do rally from here, where might we expect kind of a relief rally to end? So the first thing we can look at is the 20-week moving average, because in bearish conditions, that tends to act as resistance, right? It happened back here just in April, kind of late March, early April of this year. But if we go back to prior bear markets, in the 2018 bear market, just constantly just bouncing off of it, just kind of bumping our head against it. So that's currently sitting at 34.4K. It'll keep coming down, but that general range. So should we rally, kind of have the opposite of that bearish scenario, should we see a relief rally from here, that would be one level to watch as a potential resistance zone. We also just look on chain and see, where are people's cost bases, and kind of confident with the 20-week. A lot of it sits in the 30K range, and so that's another reason why I think if we rally, 30K could act as strong resistance, because once we get back up there, if things still feel very bearish or the sentiment's still very bearish in the market, a lot of these people might just try to get out, while they're even, not kind of hold it, not risk it for higher prices. So I think that as we maybe would come up into this, we'd probably get a lot of selling pressure, which would make me think that a continued rally beyond that is unlikely, and would probably be the case we'd bounce off of it, maybe have to go down, try to set in a higher low before testing it once more. But time, of course, will tell. So those are some levels I'm looking at, right? Should we see some bullish action? I'd expect 30K to act as strong resistance. Should we have to fall down? First look at the 300-week, which is at 16.7K, then look at around 12K. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. Put a lot of updates, better indicators, and more over there.